G'day, Money Morning. She's Friday and we're bloody dingo to the arsehole bloody at the moment. How good's my dingo party shirt?
Love it, mate.
Cheers, Spinner. W-A-B.
Yeah, here.
Best to describe it.
You love it, mate. You're a dingo convert, which I never thought
am.
I'd hear you say back in...
This is my public announcement that I've converted from Swan Draft to dingo. Now, that is saying something.
It's pretty substantial, mate.
I love it. You know what else? I love dingo as much as you love coal at the moment, Trav. We're going to get into a bit of coal.
That is in the agenda, but JD will be talking about that one. What else we got? A bit on
Bloody
some of the...
Piedmont.
Piedmont, and then...
Selling some shares.
Leo Lithium, I've done a big write-up on, given some interesting news. They put their quarterly out, but guess what? Ganfeng put an announcement out too, which wasn't talked about in Leo Lithium's quarterly. It's some machinations in that deal that need to be discussed, Matthew Michael.
JD's been busy translating Mandarin.
Yeah, that's it, mate.
Did a good job there, mate.
And we got a quick comment on some short positions out there as well as you're going to do a bit of a industry chat.
Oh, look, I love the industry.
Let's get straight into it then, hey?
Boys, before we get into it, I wanted to, we've had some good engagement this year. There might even be some new money miners amongst the listeners, the viewers, etc. And they might be thinking, geez, how do I get more involved, more engaged and support these bloody great three blokes that are giving me this good content? Well, I've got a three-way prong pitch here for the new listener or even the old listener that's been around for a while. Number one, if you're watching it on YouTube, subscribe. Apparently, it means more people can find our content, which is a good thing. I'm looking at the chart here and it says only 50% of the people who watch our content subscribe. So just fucking subscribe. Number two.
Please.
Number two, we have a newsletter. It's called the Hoodoo Herald. There's a link literally in the show notes, no matter where you are. Click on that one and become subscribed to the Hoodoo Herald. There's some great content. You'll be first to know the word on the decline if you're a money miner on the Hoodoo Herald. And number three, we actually have a group chat, which is for the most engaged money miners out there. It's there's a link to that as well. You got to join the Facebook group, and then there's a messenger chat, which has got about 700 people in it at the moment. And the philosophy there is just, mutual education. There's no pumping, no ramping, none of that's tolerated, but it's all about, helping each other learn in the areas that, and that you don't know, you seek some info about.
You get a heap of shit hung on you if you pump a stock in there and boot it. Mate, and merch too. You click the merch. Got bloody T-shirts to giving them away. They're going out the door, boys.
Well said, lads.
Merch link in there. Right. I think we're due for another Investor Day visit somewhere. We went to Pilgangora last year. I could do with another one. And you know who could provide a full turnkey solution for an Investor Day?
Turnkey.
Oh, and I'll explain why. Brooks. So Brooks, we've been plugging Brooks Airways, but everyone would have seen, Brooks Hire, Brooks Equipment. I'll show you how it ties in for an Investor Day. Obviously, first step, get on the Brooks airplane to fly up to site. You get off the plane, then you hop in a Brooks bus or a Brooks ute to go to site, and you drive around site, and you could possibly look at a Brooks dozer pushing some dirt up that a Brooks digger then picks up and chucks in a Brooks truck. You can see them all there. They're just bloody flying out the door, the yellow gear. Then after you've checked it all out, they always take you to lunch, so you can actually... Look, if it did go a bit longer and it got dark, you could actually light it up with a Brooks light tower. So there's a fail safe there. After you're done, they always give you a big bloody lunch. You can go sit in a bloody Brooks portable lunchroom or a Brooks demandable, and then once you're full, you can then go have a shit in the Brooks portable toilet. And what a bloody service! And then hop back on the Brooks airplane to come back to Perth. Brooks are like the latest stage of, I guess, your KCA, your Anytime. They said yes to everything, got that big. Now they've got divisions, like separate companies, and that's probably where KCA and Anytime are heading. So, mate, Brooks Airways, thanks for your bloody support.
Once you start seeing Brooks around, you never stop seeing it. I've noticed this. It's just like it follows me. Everywhere I am, I just see a Brooks something now.
I think, if I've been on a run sometimes and I've had to quickly go to the loo and you find a construction site and there's the dunny there.
There's a lot of Brooks on construction sites.
I've pissed in a bloody Brooks toilet before.
Yeah.
So
cheers,
and it was a bloody one of the best ones of my life. Oh, mate.
Thanks for the sponsorship and for providing Maddie a place to piss.
Love your work. Right, now reports are MMTS's Shannon McMahon had, during the Christmas break, one single 6-hour period where he wasn't thinking about tenements. So he did have a bit of a breather.
When was this 6 hours?
Not disclosed.
Okay.
Yeah, I don't know if he's, but yeah,
Right.
it's a big thing for him because a man that is all about tenements and a company that is all about mining title management across Australia, not just WA, the mining hotspot, South Australia, Northern Territory, New South Wales and Queensland, just they're absolute head of the pack, don't you think?
I have.
Tenement management.
They got some software that just bloody blows the competition away. In
Well,
fact,
it doesn't just blow them away, Trav. It actually makes it impossible for a tenement license to lapse. The MMTS gurus are just all over it, mate. I don't think Eva and Helen even sleep. They're monitoring tenements all night, all day. They're not only monitoring their clients' tenements, but every bloody other tenement out there that might come up or lapse. And, mate, they're on it.
They're
Bang.
on it. They're so-
MMTS, get that tenement
All you have to do is get in
for
touch
you.
and they'll do that for you.
Get in touch and bloody just watch the show. That's all I can say.
the
MMTS.
hydrolyte of title services, mate.
Couldn't have said it better myself, Rick Daunia.
Prevent the headache. Use MMTS.
MMTS. Love your work. Right. We've had a good start to the year on the show. It's been some juicy content for us. Some big news, but unfortunately, some of the news has been and the more negative for the industry. Like
I felt like a negative Nancy on the show.
Yeah,
Have you?
but I hate I really enjoy talking about shit behaviour and highlighting that, but I hate talking about mines going into care and maintenance and mines doing strategic reviews and all from falling commodity prices. It's really hurting the industry at the moment. It's a tough little spot because, nickel.
It's a
We've
crunch.
seen this week, bloody nickel miners just really struggling, especially when you see BHP flag possible reviews and write-downs. They have the biggest nickel business in Australia. They're guiding for 80,000 tonnes of nickel.
I think it's 42% down the commodity in the last year, which is just a huge hit.
Oh, well, because then you got Ravensthorpe, they stopped production for First Quantum. Ours will be on Glencore's Murrin as well, I think. So BHP does 80,000 tonne, Murrin does 36,000 tonne. So,
Difference is they're a commodity trader, so things you
I
can
think-
just shuffle things a bit more differently.
believe it, because they've got 1,100 jobs there. They've got cobalt coming out of there as well. So it's actually Australia's largest cobalt producer,
Didn't know
Murrin. So maybe that cobalt's gone down too, but that might be something that keeps it open. Look,
I'm afraid to talk about IGO and all that sort of stuff, but
bloody shocking. The latest spod price this morning off must be the last traded, US $840 a tonne. So it's still creeping down. Look, remember, everyone probably forgets by now, but December 2022, Pilbara Minerals sold, when they were doing that BMX auction, a 10,000 tonne parcel of spod was at an SC6 equivalent price of $8,299 US. So nearly gone down tenfold. They were little pieces of it, but like their average realised price for that quarter was nearly 5,700.
you mean the year before last?
Yeah, December 22.
Yeah.
So 5,700 for 5.4 spod down to now 840. So it just shows why everything is being pummeled the way it is. So, and because we also got a bit of data from the analysts about the Chinese lithium inventory showing that it rose last year, which you'd expect in a growing market, but it's now sitting at a point where it's got I think 6 months of sales worth.
Yeah.
And I guess the analysts are predicting a slowing of that inventory stocking rate for 2024, which means less demand and lower prices. Because I've had so many comments for a lot of them, people in the retail punting things say, "Oh no, lithium it'll have to rebound soon." And it's like, well, what's going to be the catalyst for it? We don't know. It might rebound, but there's a chance it might not unless there's that catalyst.
Supply compression is typically the cure for low prices, but we haven't really seen that take effect just yet. On to your point on the data there, Matty, like the way it was kind of articulated to me is a lot of the investment banks who put out research and forecast lithium prices, they've had a pretty substantial readjustment in what were in the assumptions of those lithium price forecasts, the ones that have really revised downwards. and the cause of a lot of that was a miscalculation of what the potential, lithium intensity might have been in some of these EVs, because a lot of those assumptions were being driven from, well, if you look at all of the lithium going into China, and then you look at all of the electric vehicles that are being produced, but there was a missing part of that formula, and that's what's the build up of inventory, and it's a bit of a black box.
Yeah.
And now that some inventory data has been washed in the market, I think a few people have revised down the expectations of what the lithium intensity in the batteries are.
And is that lift in inventory, or also represents that batteries weren't needing as much lithium as they were predicting per unit because they're back solving it?
That's what I thought. I'm probably going to have 25 lithium experts tell me I'm wrong on this one, but I'm just not my numbers, but someone else's.
Yeah, I reckon on the back of all that, and nickel and lithium particularly, I'm saying that look, underground mining is going to have a lot of pressure on it in this year, because look, we've already seen Odysseus Holt shaft finishing off the shaft. That operation's even, I would say, under pressure of going into care and maintenance as well. Core lithium stock production, and that takes away that potential underground contract that was coming up for their operation. Savannah's already stopped. I don't really see any new underground mining contracts coming up anytime soon. I know Pantoro had that Scotia one, which would be it's a small contract. Yeah, developer doing that Mount Marion exploration decline, but that's about it, unless there's some gold mine restarts or something like that. Spartan don't look like they're going underground anytime soon. Still a lot of exploration and mill upgrades and financing to go. Copper and zinc haven't turned around to a point to justify developed return on Woodlawn. I think there's big shift in the labour market, I think, this year, because that's a lot more people looking for jobs now rather than what we've seen. A lot of companies looking for those people. So all those $1,800 a shift jump operators that did the old, I'm snatching it unless you pay me $1,800, might be back on $1,200 where they belong.
Oh, Matty. You'd be one of them.
I got to be. Oh yeah, I got that. No, to get 1,800, I released a podcast.
This is the pitch for you.
That was the podcast.
That was a
about
classic.
Matty's job thing. So
well done,
I
mate.
went about it
At
a
least
better way.
at least you did some work to get the pay rise. All right.
Anyway, more news to come on this front, unfortunately, I
Yeah.
think. So, right, JD.
I mean, it's
shorted. Oh, yeah, mate, bring it in. What do you got?
Well, it's probably very reflective of what you've just said there, mate, that 8 of the top 10 most shorted stocks on the ASX are mining companies or developers at the moment. So just highlighting the ones in our industry, you got Pilbara, Syrah, Core Lithium, Deep Yellow, Peninsula, Genesis, and Liontown. We'll just flash up on the YouTube what the percentages are. They sort of range between 21% of the shares on issue being sold short and 8%. So I think that sort of follows on exactly from what you were saying there, Matty.
All right, boys, let's get into the dirty black energy.
All right,
Coal.
we'll talk about a couple coal miners here. So firstly, Yancoal, which I think we have to disclose one of us holds a few shares in.
Ding, ding, ding.
So they had a pretty strong quarterly. Comparing them against the other coal miners, they generated $477 million in free cash flow, which, kind of needs an exclamation mark next to it.
Bloody $477 million. Wow.
Yeah, huge. So that is predominantly from thermal coal for Yancoal here. And they've been, investing in their assets over the past few periods, over the past few years, and they're really bearing the fruit of that now. They got $1.4 billion in cash, debt-free, $6.9 billion market cap, so about a $5.5 billion EV. So I think there's more than a couple investors out there sort of looking around thinking, will the company change its dividend policy? They're currently paying 50% of their, NPAT or their free cash flows as dividends, and potentially with the pretty phenomenal increase in cash, that might change over the near term.
So NPAT's net profit after tax, eh?
Yeah, that's right.
They're all through Hunter Valley, mate. So in Queensland as well.
Yeah, that's
Bloody
right.
Coal operations everywhere.
So for those a bit less familiar with the stock, it is substantially Chinese owned. All you have to do is open the quarterly, have a look at the logo, and you can infer that one. But unlike some of the other companies that we've spoken about during this week, I think they're pretty differently positioned. They've got a dividend policy in place already. Like we said, there might be changes to that imminently. So Yeah, I mean, I'm sure the shareholders of Yancoal would be sitting pretty happy after today's quarterly.
Oh, 20 odd million a year in interest. Bloody nothing like
In interest on the cash.
on the cash.
Way more than that, mate.
Oh, 5% of 477. Oh, a quarter, sorry.
They got 1.4 billion in cash.
Oh, Jesus.
Yeah.
Holy
Yeah.
snap and duck shit.
That's just the change in cash. It's
there.
That's just from this quarter. So let's get into Whitehaven then. They also had their quarterly out. So some interesting events in the past quarter. We've spoken about the transaction they did in October. They announced that that's going to close April 2nd. They also announced a credit facility in December. So it's also always interesting to see what the cash build is and how production performed. So they finished the quarter with net cash of $1.5 billion, and that's after paying $833 million in tax for FY23, as well as putting down a US $100 million transaction deposit. So
Tax. So rude, isn't it? What?
$833 million, huge. So there's quite a disparity between met coal and thermal coal prices currently. And Whitehaven, they're making the transition from being predominantly, greater than 90% thermal coal producing to quite a bit more met coal producing. And they're quite keen to emphasise this in their presentation today. So you can see that there's a US $150 per tonne difference between the two different indexes that they go off. But they get a slight premium to that thermal coal price for their product, and then a huge discount to the met coal index that they use for their met coal that they produce. So that'll change over time as the new product from Blackwater and Daunia comes into account. And just on the production side of things, Whitehaven has, pretty consistently underperformed over, say, the last 5 years, and they flagged again geological issues, but maintained that they're going to meet their full year guidance.
Right, JD, the credit facility.
The credit facility, Matty.
Enlighten me, Cobber.
So when they announced that deal, they announced a US $900 million credit facility with Jefferies and Bank of America. That was only going to last until mid of this year.
It's bridge finance facility.
Exactly. So they've now got a $1.1 billion credit facility in place. And it's pretty interesting to see because they were very eager to tell their investors on the call that they got way more than they were looking for. They got it on better terms than they were looking for. And, that had been previously reported by some news agencies, but the company was very keen to reiterate all of that on the call. Be interesting to see when the long-form documents come in sometime early this year.
I don't know how a 6% margin is on better terms than before, when I'm pretty sure they'd guided towards a, like on the bridging facility, it was like only a 3% margin or something like that. So anyway.
5-year terms, they claim that they were seeking, I think, 6.25 to 6.5%, but naturally the company's going to say what they did was good, don't you think?
No.
Never. So a couple thoughts on coal and on Whitehaven in particular. The financing for these coal assets is going to continue, whether, the big four banks move away from it or not. It's just going to move to, private markets and happen a bit more behind the scenes. I think that's reflected in the CFO saying that they were substantially oversubscribed in their interest. If we look back at BHP's announcement yesterday, they had a bit of a stinker on the met coal front, but just comparing the prices received, the met coal price that BHP received was significantly higher than what Whitehaven had achieved, and that's just reflective of the quality that they have in their portfolio. And I think it's needless to say that the assets that BHP has sold to Whitehaven are probably the worst quality in their stable of assets. On the handover, we made this comment when we spoke about it last, Trav. They just wanted to hold on to that asset for as long as possible. They didn't want to give them over. They just wanted to reap in all the cash flow before they had to hand the keys over. So, I think the cash flow coming from these assets is exactly reflective of why they've done that. And lastly, just on the funding, April 2nd is when the handover is going to happen. So they had discussed a 20% sell down in Blackwater and Daunia. That would probably be to a steelmaking company in Asia. They said on the call that they could be interested in potentially selling up to 30% of probably Blackwater, depending on the interest. So I'd be surprised if we didn't see this, given the cash position and the debt that they now have. It could be getting a bit tight with what they have to, hand over in about 4 months' time.
How much would 30% be worth?
I'd say between 30%, a bit less than $1 billion.
Yeah.
20%, 600-ish.
Oh, mate, interest again. Oh, mate, just cash, cash, cash.
So much cash, Matty.
Cash is going out the door. Oh, anyway, what's up next, Ricardinho?
Leo Lithium is the one I've done a deep dive on for you today, Matthew.
Leo the Lion and Marilla the Gorilla.
That's the one.
Never forget.
Yeah, that one will be jarred in our memory for all the wrong reasons. But yesterday, Leo, they released their quarterly to the market, and we ended up cutting it from the show yesterday because we just had too much to talk about, Matthew. But there was more to the story than just the quarterly as well. And that's the thing I'm going to get to. It's the stuff that was left out of the quarterly.
Oh, you couldn't even. It wasn't at the bottom to read.
Nah.
Oh,
nah, left it out. Not there. So anyway, I will get to that juicy bit in a moment. But to start with, I'll just give a bit of a recap on where things are at with Leo Lithium. The shares have not traded since 14th of September last year. That's 4 months now. And in September, they were actually only trading for 9 days there.
yeah, they were open for a bit and then Gornskis again.
Gone again.
Yeah.
So for the last 6 months, shareholders have had a single window of 9 days to trade their Leo Lithium shares. You can imagine shareholders are pretty frustrated there. And the question is, why has Leo been in suspension? It relates to the fractured relationship with the government of Mali, which we speculate relates a lot to 5-inch too. So Leo Lithium was a demerger of 5-inch in mid-2022. 2 weeks later, 5-inch went into suspension where they've remained ever since. While information has been tight-lipped, it appears that there are some chunky-sized liabilities associated with 5-inch's Marilla gold project in Mali, which they're in the country and 5-inch has seemingly cut ties to the asset with the liabilities left unattended to.
Yeah, if you want to know more about that one, we did a massive deep dive about 6 months ago. The whole story behind that one.
Oh, because it's unreal. Because that Goulamina ore body, that mine is brilliant. Like that, just a big, massive, high-grade open pit lithium deposit. Absolutely shat on Linetown and all of them for a deposit, just so easy.
Yep.
In Mali.
Just can't mine it at the moment.
Yeah. So, like you said, JD, if at the end of this episode you're curious, just search WTF happened to 5-inch, and our intern Paddy at the time did a great story of that one. So
I cut you off there horribly, mate, and then
I
realised you were about to say that.
I wonder if Paddy stopped shaking. Yeah. If he stopped sweating, he was shitting bricks for that.
On your Paddy.
Good on you, Paddy.
As a result, there are plenty of rumours circling around that a fractured government relationship with Leo now is related to those 5-inch liabilities. And while Leo is now a separate company with separate board and management, apparently that doesn't heal the damage from the 5-inch woes.
It was going all right for a bit in terms of that link, but then it just reared its ugly head.
It did.
It did rather quickly, didn't it?
It did.
Here it is.
And over the last 6 months, Leo has had some rejigging to the ownership of the Goulamina project, which you mentioned, Matty, is a pretty substantial one, especially as it relates to their JV partner, Ganfeng, in the ownership structure there. We previously talked about how in a recent recut, Leo had foregone operating control without any premium associated with that. So, what was the update in this quarterly? Well, to be honest, the content in the quarterly wasn't very newsworthy. The project's 60% complete. Leo held cash of 33 million Aussie and Goulamina held cash of US 9 million. It does raise the question if Ganfeng and now in control of the JV, can Leo be in trouble if there are cash goals? There was no mention of the words on time and on budget, which had been words included at various times in the past. And then a stock standard, we continue to work with the government of Mali, quote bizarre, was in there as well. But gentlemen, there's more.
But wait, there's more.
There was news that was left out of the quarterly that emerged the same morning the quarterly was released. This time it was released by Ganfeng. Ganfeng released this announcement themselves saying they have agreed to buy another 5% interest in the Goulamina project for US $65 million. Now, I chucked this PDF into Google Translate because unfortunately my Mandarin's not up to scratch. But
as in, you can read some Mandarin?
I can't read any Mandarin.
Oh, that's okay. Yeah, I thought so. I'm thinking, you surprise me all the time. I wouldn't have doubted you. Anyway, what did Google tell you?
So my trusty Google Translate skills, by my reading, this is what I could deduce. There was a deal approved by the board of Ganfeng on the 15th of January, and they're buying 5% of the of Goulamina from Leo for up to US $65 million, and there's something in there about a capital increase not to exceed US $138 million. In simple terms, the JV started at 50-50, then it went to 55-45, and now it looks to become 60-40 while in suspension. And
that's
those
you've
numbers.
still got the Mali government to come in
Exactly.
for their free carried interest, which could
Yeah.
be
Yeah,
20.
It could be 20. Is 10, and they've got an option for it to become 20.
Yeah.
So you're right, and that's before that. So raise the question: what does this all mean, Matty and JD? Well, Leo, I think, is in a pretty precarious situation. As I understand it, Leo doesn't have an export license yet, which they need from the government in order to benefit from production, and I think they might likely also need a power license. Otherwise, they would need to use modular generators, which are vastly more expensive. Hence, resolving this government relationship is a massive issue that might have big implications if Leo can't resolve them. So Leo's left with 40% of the JV, but 36% of the project because of the government 10% free carry, which could be as low as 32 if the government exercised that extra 10% option. Recall the 5% that was sold before this 5%. So this was the one that I think JD updated, last year sometime. That was sold it was a price tag of US $137 million, and now this one is US $65 million. Seems like a fair haircut on the last price, but here's the catch, right? If my Google Translate skills are okay, it reads to me like the $65 million this time is going directly to Leo Lithium, whereas last time the $137 million went into the JV. So it's about the same.
Yeah.
Yeah, half the price, lithium prices have over halved, so it might be a bargain.
I mean, I'm sure Leo shareholders would say otherwise, but so if you value Leo Lithium's remaining 40% of the joint venture based on that $65 million price tag we have here, you can back out a value of Aussie dollars 80 cents per share for Leo. And given the stock has been in suspension for so long, with a last price of about 50 cents, it might not sound so bad. Which leads to the obvious question to everyone: why doesn't Ganfeng just buy Leo out at an acceptable price? So I jumped on Hot Copper forums, and it looks like the punters are thinking the same thing. The first comment is, can they just buy the whole effing thing and be done with it?
It actually says FN.
And on the other end of the spectrum, we get a buyout at a cycle low would be a truly awful end to this ongoing cluster F of bad luck and previous bad management. Just got to hang in there now and see it through until plant performs to spec and wait for the cycle to turn upwards. That is the time to seek a buyout, not before, depressing as it all is at the moment. So typical emotional responses from the shareholders there, but you can understand it, right?
Imagine if you're a long-term bullish African mining shareholder and you had shares in AVZ, 5-inch and Leo. God, you'd be bloody spewing.
Be nasty.
Far out.
Yeah.
Can you imagine if, like, say, Goulamina and AVZ all had smooth project activity and they were online in this lithium market, and those projects did come online, and didn't go through all this? Like, wouldn't that be because that would have been a lot of lithium and different dynamics.
This one's still coming online apparently. I mean, it's still progressing. It's just
Go and buy some Ganfeng stock, Matty.
Ganfeng will be
Where do they trade?
Shanghai Stock Exchange?
One of those, yeah.
Makes sense.
But I think, like, what's the big issue overhanging all of this, that we're going to point to is 5-inch. It makes the most sense to us as the logical part of the puzzle that fits into all of this. Oh, and 5-inch, they're still in suspension themselves, and they own about 18% of Leo Lithium. So the big question I have is, wouldn't it be in 5-inch's best interest to cooperate with Leo and find a solution with the Mali government? That would just seem so logical to me to maximise the value of the Leo Lithium stake.
That 5-inch holding in Leo, does that have any bearing or a factor that Ganfeng might consider if they were looking to buy all of Leo or not?
If you bought all of Leo for cash, then it just ultimately means that
sits in 5-inch.
5-inch gets the cash, but I mean, hopefully 5-inch come to the party and provide a resolution for them with the government of Mali to make all of this so that shareholders get something at both 5-inch and Leo.
But if they sold it and the money went to 5-inch, that money would just sit in 5-inch until they come out of suspension, wouldn't it? and shareholders wouldn't get it.
But that would be a remedy, and the company has said, we went through this, that they would look to distribute cash. I wouldn't hold them to that, but that would be that, and the cash would hopefully be distributed after a long and arduous period.
Yeah.
It all comes down to sensible governance, mate.
Yes, anyway.
A topic near and dear to our
Back
heart.
on track, right. Piedmont, PLL.
Well, let's stay on the theme of African lithium. Piedmont. So what we're actually talking about here is their stake in Atlantic Lithium, which is obviously
so we talk about Sayona and Piedmont, but they've also got the link with Atlantic.
Which, ding, 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 I know one too.
Yeah.
Which one have you got?
Remember I bought that because of the bloody the news that Azor had put into bids at a higher price.
Right.
We'll get into it here.
Yeah.
Oh, there you
So
go.
they've had a rough year like most of the lithium market, down over the past year, 66%, about a $560 million market cap as things stand. So they're selling down their stake in Atlantic Lithium. Now remember, they had a roughly 9% ownership in Atlantic as well as being JV partners. So they're leaving that joint venture unchanged, but they've sold 24.3 million shares at 25 pence because these guys, Atlantic, are also listed on the London Stock Exchange. So they did that at slightly above the market price. So like you just touched on there, the buyer was Azor. Now they were roughly 25% shareholders in Atlantic prior to this.
It's a tough one to read, that one. It's
Azor.
Yeah, anyway.
You're too right. So this is the same mob that had put in 2 bids for Atlantic. So one wasn't announced at the time, but it came in around October, and then the one in mid-November was announced. Now, it's kind of intriguing. They put that in, and they said it was at the exact same price that they'd bid 1 month before. So it was a bit funny. For those wondering, this group is a privately held South African mining company. They were previously listed, but they became private in 2020. So both those bids were at 63 cents. The stock now trades at about 40 cents. So the company, Atlantic, rejected those bids. The market never really warmed to them. The stock sort of trailed off after that. And then Atlantic did a capital raise, so it didn't look too, great on the surface. But, that all said, I think today's news sort of reaffirms that Azor are interested in becoming bigger owners of Atlantic, and we'll sort of see where it goes. And I thought it was pretty good to see a bit of contrarianism in the lithium space. It's been all bearish lately, but this is the time M&A should be happening if you are a lithium bull. So now, and I dare say things will get cheaper in the near future. But this is where you should be looking as a corporate to buy stakes, and that's exactly what Azor have done here. From Piedmont's perspective, they're clearly in cost-cutting mode. This will only get them roughly $8 million US. They said they ended the quarter, that is 31st of December, with $72 million. That sort of indicated that they'd spent/lost $23 million over the December quarter. So they haven't actually released the quarterly yet, but it'd be fascinating to see how that comes out, how the North American lithium asset performed as it's sort of in its ramp-up phase.
Yeah.
And, subsequent to that, sort of seeing how things look into the future with that offtake. Remember, they had a quirky sort of offtake where they get 113,000 tonnes per annum of spodumene concentrate, or 50%, whichever's greater, at a ceiling price of $900 a tonne.
I remember that $900 a tonne just seeming so cheap, right? And it's like,
That's a
spod's below that.
profiting. Oh, God, isn't it? Yeah, it'd be interesting to see who the big wigs in the industry that have the minerals to start doing M&A when lithium's down here.
Is Rio going to be counter-cyclical for the first time in their life?
I hope so. That'd be fascinating to see. And next week is going to be a ripper with a lot of quarterlies scheduled to come out.
Yep, and it'd be interesting when we say down here, will this be down here? You never know the bottom.
No, mate. Yeah, bottoms don't. Yeah, bottoms normally are not made on a waterfall.
Yes, right. Hey, good week, boys. Great to be back for the Money Miners.
Sure is.
Bloody shout out to bloody Spinner for me dingo gear. Love your work. All our other bloody partners, absolute legends. InvestorHub, give Rory Stein a buzz. Mate, DSI Underground, Terra Capital, McMahon Mining Title Services. They might. The company that never sleeps. Future-proof Consulting, Anytime Exploration Services, KC, A-Site Services, Brooks Airways, and K-Drill.
Hooroo.
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 The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.